Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Wednesday, the 6th of December, Bull versus webinar. Sorry, Bull versus Bear webinar. Steve Miley here on the call for trade day. Welcome, everyone. We'll go for our usual regular run through in here today. What are the macroeconomic, geopolitical, fundamental events impacting financial markets right here, right now? We'll take a look at the calendar, what we've had, what we've got coming up. We'll take a look at some charts as we've got here, look at some technicals, see what's going on in the markets, and see which way we're pointing and where the pain points are, where the potential acceleration points are on financial markets. So, going to start off with the charts actually. Putting down my reports in here that you can access just below where you are right now. If you're watching live on the webinar, just below there in the technical analysis section. I upload these this is my evening. It's going to be end of day. It's after the US closes, basically. End of day US. So these uploaded for me yesterday evening, for you guys in the US yesterday late afternoon, early evening. So what we see in here is the Nasdaq came right off of this important 50% retracement of the latest up move. So the latest up move from the swing at 15,207 and 3/4 up to 16,208 and a half. That 50%, it bounced off that despite pushing, very briefly, but a couple of times now, briefly below this important 15,79675 level in here, this swing low, which it hinted at the top, but it bounces right off that 50% and is holding above there. So certainly in a wider consolidation there, but pointing back higher after bouncing off that support, and a more resilient tone really if you look at the ES. Although the ES has been very, very sideways since before Thanksgiving, you see like a succession of higher lows and higher highs in here. So it's grinding up in that consolidation in here for the ES. So still an underlying bullish theme in here for the ES. And again, rebounding from support yesterday and underpinning a more positive tone. So still carrying a positive tone going into today. And then importantly, if we just jump down to, I'm going to leave gold. We had this big blowout top on gold in here that's come back, but it's held this trend line in here that comes back from the October rally. So even though we had this massive blow off top, having hit a new record high, intraday record high, gold holding that support. But moving off of gold, I think we need to look at oil as well. Oil continuing its down move in here, looking very vulnerable, down to new lows in here, breaking through the 72.37 level now, challenging this trend line in here. Even this morning, that comes across from 65.00 from the May low in here. This is now on the January contract. Okay, so really susceptible to further weakness in here and oil, and that should be supportive of obviously lower oil, lower inflationary pressures, and potentially then positive for stocks. Okay, so that's supportive. The other interesting thing is in here, bond markets continue to go to new highs in here on the long end. So you see 30-year new high prices, which is low yields, 10-year just nudging there. 5-year didn't quite make it, and the 2-year, if anything, more in a setback and a small bounce, but more in a consolidation. Remember, the short end led the way higher in here, but now the long end is playing a little bit of a catch up in here. So that's important as well. So longer term higher prices, longer term bond higher prices, longer duration bond that is, higher prices equals lower yields, and lower yields at the longer end. So the shorter end, remember, echoing the central bank, and we have had that more dovish pivot. So that's why the short end led. Now the longer end leading in here, and that can be positive in this. Longer term interest rates are lower. That can also mean that maybe a little bit more faith coming through in the economy. Okay, so what we could be seeing in here now is a more positive tone coming through on bonds in here, potentially assisting with lower yields at the longer end, and the lower yields at the longer end obviously flowing to, let's say, mortgage rates, and that could be positive for the economy. And then in turn, we could then see a positivity for stock. So it's all like aligning fairly positively on the stock front in here. Overnight in here, we've not had too much. We did get this German factory orders, German manufacturing data in here this morning. Remember, Germany is the powerhouse of Western Europe on the manufacturing side, and worse than expected. So that's a little disappointing. Looking into this afternoon, the key event's going to be the ADP non-farm employment change from the US side. We get that in just over 40 minutes. Okay, so helmets and goggles ready for that. Remember, that's the precursor to the actually official labour market data that we get out, the US employment report on Friday. So we'll be watching out for that certainly in 40 minutes now. And then this is going to be interesting to watch any kind of guidance from the Bank of Canada in their decision statement. We're not expecting any change, but obviously the Canadian economy is very much tied to the US economy. We've got this anticipation of a dovish pivot from the Fed, getting similar undertones with maybe the Bank of Canada is done on hiking rates. So is there going to be any indication that the Bank of Canada are now looking towards potential rate cuts going into next year, because they are kind of lockstep? Their economy is very attuned with their major trading partner, which is the US. So you might get some kind of that's just going to be interesting to watch. Right? I'm not saying it's going to have a massive impact on markets, but it's always interesting to watch what the Bank of Canada is doing in relation to the Fed. We also get oil data if you're an oil trader out, as usual, the weekly oil data at 10:30 on a Wednesday. So there's an article on the German industrial orders we just spoke about, worse than expected. And in here, a peek at the jobs market before payroll. So again, that's talking about the data we have upcoming today, the ADP data that we have today. 5 things to know to start your day. Just going through this fairly quickly. I've got another article on this now. In Europe, traders are now fully pricing 6 quarter point rate cuts by the Euro Central Bank in 2024. Okay, so we spoke yesterday about Schnabel in here, a hawk in the ECB pivoting to more dovish in here. So that's going to be, that's there setting up now. We saw a really strong rally over the last 24, 48 hours in European bond markets. The Bund future in here surging higher, and that Bund future surging higher on the back of the fact that we've got anticipation of a more potentially more dovish ECB. UK markets are pricing 3 Bank of England cuts starting from June. Bitcoin's up. Why is Bitcoin up? Bitcoin's up because the dollar's down. Okay, so and gold pushing higher again because the dollar's down in here. And US stock index futures. So all of this in here now, and the market's getting very excited about potential rate cuts coming through in 2024. Nothing to worry about. It's here. CEOs of the biggest banks of Wall Street expect to testify on regulatory oversight. Yeah, boring really. China's Huawei, Intel, a number of chip startups among our growing field, very formidable competitors to NVIDIA. Nothing's going to really affect up in here. Airline industry, again, nothing. So nothing in here on here of too much interest, apart from rate cut further going global. Stock keep rate cut faith, again, focusing on that. Bond rally falters. Well, has it really? 10-year yields rise back towards 4.2% as pivot debate rages. Well, it hasn't really. We have had a little bit of a counter move this morning. But generally, bond markets are on their upward path in price at lower yields. And oil, as we've already spoken about, 5-month low, breaking down through support levels. And then again, talking about traders' eye 2.5% key ECB rate in 2024 as ramp up bets on rate cuts coming through. And then we did get this fallout. So this was following through from yesterday's the blue chip stocks in China. Although the broader market was up, blue chip stocks hitting 5-year lows. And after the mood from Moody's that we discussed in yesterday's call. On the Fed tool in here, still looking for unchanged in December and the meeting next week. Slight chance of a rate cut, but that's pretty much not going to happen in here for January. But March now, look, we're up at this. So over 50% at 500 to 525, a 25 cut and 6.8. So you add these together in here and you got over a 60% chance now. Excuse me. Over a 60% chance now of a rate cut coming through in March. I wouldn't be surprised to see this tracking up. The combination of these two adding up to over 70% to 75% as we go into the holiday season. If we get any kind of, and obviously that's going to be very, 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 very much dependent on what the Fed delivers us next week, and as well what we get from the data we have coming up this Friday from the employment report, and we get one more CPI print as well from the US before the end of the year. If we look on the charts in here, nothing really to add. We kind of run through in here, but you see in bond markets, we have backed off on the 10-year this morning slightly, but 10-year bond futures in here did hit new highs yesterday. A slight back off, but it is a slight back off in here. And if you go to the oil, and here you see oil down through, and if we draw that trend line across there, we're actually just nudging down through the trend line that comes across in here that we had on the analysis that we had up earlier on. Going to the equity indices in here, so the this was the bit of the worry. For some reason, it still wouldn't get me. Let me see if I can get that NQZ up. But I don't want to. Yeah, let me just get that up in here. So in here you can see on the deck chart in here we're flirting with, so we did just on the deck chart, we did just close down below back on Monday, when we had the big sell off on Monday, below that 13 period EMA, and then kind of got back towards it yesterday and closed right on it and back above it. So kind of flirting with it there. But on the ES side, we've come down to it a couple of times Monday and Tuesday, come down close to and rebound off. So not only the Nasdaq respecting that 50% retracement level that we just looked at. Remember, that was the 50% of just this up leg in here, this move from here to here, this latest up leg. I can throw that on this chart as well if you want. But that's the one that you saw on my analysis, the halfway point there. So we bounce right off of that there. Boom. Right here, okay, but then also you saw that support, and then on the 13 period EMA on the daily, we're respecting that on the ES. So still pointing higher for me in here. I'm bullish, maybe back up to the top end of the recent range, back up to the recent highs on the ES. Not looking for so much, maybe in the Nasdaq, but maybe back up towards through 16,000 to like 1650, maybe kind of area going into today. Obviously, ADP employment is the main focus. It could drive us up there. But the market's not going to make a significantly large move, I would suggest, in here ahead of the employment report that we have coming up on Friday. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you with another bull versus bear webinar on Thursday. Bye.